The Fed's comments this week have sent markets into a tailspin. We're going to look at how data, discipline, and dividends can help buy you the patience you need to get through it. So this week brought the much anticipated Fed announcement, particularly as hopes for a pivot or a pause began to build within markets. What happened was another 75 basis point hike from the Fed. That was completely expected, as well as some signaling that, again, they would be looking at the data, may pause before hitting their inflationary goals, which sent markets higher, only to have Powell come out and say, talk of a pause or a pivot might be premature. We might need to raise rates higher than had been previously expected, sending markets plummeting back down. In short, we don't think anything that was said yesterday actually was all that surprising, certainly on the negative. In fact, if there were any surprises, it was probably on the positive side. Without inflation data actually coming down meaningfully right now, Powell is never going to come out and be anything other than hawkish. But there were three big key takeaways that we do think create some real optimism heading into 2023. Number one was discussing that a tightening of a policy only needed to occur up until a point that set inflation on a target over time to get to 2%. That over time is critical. There had been a lot of fears that they would keep raising rates until they saw it. Second was an acknowledgement that, hey, these hikes are going to take time to work through the market. Again, signaling a little bit more patience from the Fed than might have been feared. And lastly, that the hikes themselves are going to be smaller. And the reason this is so critical, particularly in light of the fact that they take time to work through the systems, is it reduces the odds of an over-tightening, at least to some degree. Those markets plummeted. And so have gone just in this last month from a lot of fear into mid-October to another bullish run to a sell-off. I think it has a lot of investors confused. If you again step back, take a little bit more perspective, you'll see we've just been stuck in a range between roughly 3,600 and 4,200 for the better part of 6 or 7 months. So while it's felt like a lot of whipsaw, in fact, it's really been a lot of the same. And again, something that people need to step back, get off that emotional roller coaster, get some patience. And the best way we know to build patience again is focus on the data, have a proper perspective to invoke discipline, and lastly, be able to have time, and that time can be bought through dividends and income and a proper portfolio construction. So where is the data? Well, as Michael Semblast of JP Morgan pointed out, the data is actually pretty good. For one thing, profit margins are holding up near 12%. That's about 2.5% higher than they were a decade ago. Actually are starting to be able to signal some bottom. That's huge. Again, speaks to corporate resiliency. Second, ISM data, particularly some leading indicators for ISM manufacturing, are signaling that we might see a bottom in that data within the next couple months. Most notably, the new orders versus inventory survey data, is bottoming. And why that's so critical is, again, that has been one of the best indicators for signaling a near-term market bottom, usually bottoming out ISM data, again, about 2 months plus or minus within a stock market bottom. Second point is discipline. Discipline is really hard without perspective. If you're just looking at headlines, I can't tell you how many times I've had people say, this market makes no sense to me. It goes up when I think it's going to go down. It goes down when I think it's going to go up. That's a whole other commentary in and of itself. But the key thing here is getting off that emotional roller coaster, that ping-ponging back and forth between fear of losing money and fear of missing out that we've talked about. And really, again, looking at where are we? What are some long-term truths that we can hold to? One of the long-term truths is market bottoms take time. Again, they're a process, not a point. The second key thing around those markets is looking at where you're at and what history tells you most likely lies ahead, not relying solely on your feelings. And as we've talked about in recent weeks, when you've got a market that's down 25%, as we're at right now, the highest probability 12, 24 months out is higher. In fact, 12 months out, 7 of the 8 occurrences have a positive result with an average return of 27%. Markets just need time. That time, again, is different for different investors. If you're young, It's easy. If you're older, nearing retirement, in retirement, then you got to buy that time. And that brings us to point number 3, which is the power of dividends, income in general. And that's where, again, there's some great news. A, that you can construct a portfolio, been able to do some great reviews with clients showing them how much money they've taken out and yet where they're still at because they're not being forced to liquidate positions within their portfolios. But again, not only are dividends resilient, but they are themselves a great source of returns. If you look here in the US, in just the last 2 years, dividends have not only maintained, they've actually grown by over 20% from about 115 to 140 across the S&P index broadly. In the international markets, an asset class that's been troubled, again, probably a whole other commentary of whether that's a great opportunity or not. But dividends strategy, I can't name by name, but again, have been able to add close to 20% to total return just over price appreciation alone. In summary, you got to take these things, get off the Fed news cycle, get focused on your plan, not focused on trying to predict markets. Markets, again, that are not going to work for you all the time, but will work for you over time. If time feels like something you don't have, we've got plans, we've got strategies, we've got portfolios for that that we would love to help you with anytime. If we're already doing that for you, thank you again, as always, for your trust. Have a great weekend.